in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
Good morning. Welcome to another episode of Insider Exchange. Welcome to our Market Matters segment, live streamed every Monday for your viewing pleasure. The rest of the show obviously is available throughout the week. In Market Matters today, we are taking a look at the hopeful budget speech that may come out on Wednesday. We're taking a look at CPI data out of the US. We're taking a look at CPI data out of China. And we're also going to be seeing if we can get our heads around all of the earnings data that continues to come out. Shout out to our TikTok community. Thanks for joining us. Thanks for jumping on the stream. Those that are on our live stream as well, welcome. Join us in the chats. Pop through your questions and comments in the chats. And we're going to get straight into it because there's a lot to get into this week. We'll give you an idea about the deep dive a little later on, but let's get into Market Matters for now. Is it going to happen?
I mean, surely. It
Surely.
has to. So the problem is, so the Financial Management Act thingy-majiggy says if there's no budget, no
The
worries.
PFMA.
Something like
Yes.
that. Yeah. If there's no budget, no worries. You just carry on with last year's budget, essentially. So no worries.
Last year's budget wasn't the greatest either, but okay, sure.
Well, sure. But I mean, it's not like we have a shutdown or anything.
Oh,
like
okay,
that.
cool.
Yeah,
So the world doesn't come to a standstill.
No.
The country doesn't go up in smoke. We just carry on with
But
last
by
year's
all
numbers.
reports, our finance minister is sticking to a VAT increase. And there are various different reports, 0.5% a year for 3 years, or maybe 75 points or something. And that everyone else is saying no. To be clear, everyone else is also peeps within the ANC who look at this and are like, I'm not sure this is how you win an election. Although the next national election is 4 years away, but still.
To be fair, local government is in 2026. But I, for one, took one thing out of what you just said, and it's I'm grateful that we don't have to rely on people to manually calculate what 15.5% of VAT will be.
15.75.
Or 15.7. That would just be atrocious to have to go through. If we do the 0.5% an increase per year over, it's just going to be odd numbers that make no sense. And again, there's no reason for this. So.
And 0.5% gets us, call it 15 billion. He needs, call it 60. I mean, I don't know. I mean, it comes back to, so it seems like the finance minister, and to be clear, there's no official reports. This is insider leaks via Carol Payton and Natasha Miriam and those sort of journos. It seems like the finance minister is digging his heels because there was a committee thing with the deputy president. Of course, there's the clearinghouse for the GNU, but it seems like he's sticking his feet in because, I mean, with respect, because he's out of other ideas. I'm not sure. I mean, there's talk about deferring pension payments for a year.
That was something else as well.
Which we did under Mandela.
Yeah, but okay.
know.
So you do that, and to what end, right? So while the PIC was able to, I think it was 187 billion rand that the PIC was able to improve the portfolio by, which means they can defer pension contributions from a government perspective into the pension fund and redirect those funds elsewhere. But again, redirecting the funds to where?
Well, that's the trick.
To where?
I mean, what is actually the plan here?
Yes.
And there is patently just lack of a plan. We need a plan. Like, we need a budget. And it comes back to, and we spoke about this last time.
Yes.
We all did you got caught on the radio. Like, no budget. What do I do
What
for the
do
next?
we do? Exactly.
It's like, okay, well, let's just raise tax and VAT. And VAT's a nice, easy, blunt instrument. But there's no, come on, folks.
okay.
There are other ways to do this.
So 60, let's assume the three events, right? You raised VAT by 2%. 60 billion rand comes through from that per year. Fine. You defer for the next 3 years the contributions to pension funds because we've got 187 billion rand surplus, which is not really a surplus because a fund is meant to grow, right? So let's call that another 60 billion, right? That's 120 billion. Then there is the third aspect of it, which was the loan that we've applied to the World Bank for, right? Which again is the second loan. We got the first $1 billion loan during COVID. This $1.5 billion seems to be a new $1.5 billion that we're applying for. So the 120 billion plus the, what was it, 27 odd billion? So call it 150 billion. Nice round numbers, right? 150 billion rand is now suddenly in the positive for this particular budget. Add to that the fact that the GFACRA account could potentially be looked at again.
Yes,
we know it was dipped into. We know that this is now going to be a regular thing because once it happens, it's going to happen again. So call it 200 billion rand that we somehow managed to raise here, right? That's less than the interest payments we pay in a single financial year. Firstly, put that aside. You now have 200 billion that you suddenly hadn't accounted for that you now have at your disposal. Where does it go? Because putting it to bailouts is not going to work.
Nope.
Putting it to infrastructure development, you keep saying we're going to do that, we're going to put it here, we're going to put it here. We never really see it materialize. Where would be the most impactful place to pop the 200 billion rand into so that we can actually see an economy that moves?
Well, drop VAT by 2%.
You can't. You've just increased it by 2% to get some of
Drop it by 4%. But I hear you. I mean, so I mean, what do we need? I mean, we are, the teachers are funded, and as I understand, we have teachers. Our health department is an absolute shambles, but I'm not sure they're throwing money at it solves that problem.
No.
Our police is undoubtedly underfunded, but again, I'm not sure.
You say underfunded. I've seen a lot of 1 Series BMWs on the road with Metro Police branding, but we'll circle back to that.
We'll come back to that. So I mean, so basically, it is. I mean, our big pain point is inefficient government and interest bill.
So we're just going to keep generating,
and that's the problem with the budget is that it didn't have any
cost cutting. When I looked at the last document,
it had no solutions beyond let's just raise tax.
That's it. Let's just get more money in to continue to finance the existing level of expenditure that is already unsustainable.
Yeah.
Let's not reduce expenditure.
When our household runs into a budget thing, my wife and I sit down and we have a process, and that includes a bottle of wine, and we have crazy ideas like we will never drink wine again, and that will save us so much money. You know, we have crazy ideas and we come up with stuff and we make a plan and we.
But you're solutioning in that space.
Yeah.
You're trying to solve.
It's never a case that we're going to just charge my employees more money. I mean, I would like to, but they're probably not going to sign off on it. So, I mean, it really is just a lack of thought of innovation, and it does just show. 30 years of ANC government who've basically, when we need money, we just tap the bond market or we tap the taxpayers.
And now you're running out of that, right?
And now you're running out of that. And there's never, and to be clear, there has been some innovation. There has been some stuff. I'm thinking about, we had the RDP, what was that, wealth tax back in the early 90s, again under Mandela. We had excess money under Manuel, and taxes were coming down, and so was a government
But we
debt.
also had economic growth, Si. Did you not give us the economic growth figures of there north of 3% back then?
North of 5 percentage points in the
There
early
we
2000s.
go.
So what are we doing beyond platitudes and our president being surprised that Joburg is a mess? We're not doing anything. So it's throwing, well, in this case, bad money after bad. It's like when a drunk person comes to you and says, I need $100 to buy food. And you're like, I mean, it's like, no, guys, like really, you have run this badly and you're not showing us any sense that you know how to run this or will run it well or will come with a good budget at some point.
So that's the concern, right? That's where the real concern comes in, is that even if South Africans agree to the VAT increase, even if South Africans agree to a wealth tax, even if South Africans agree to these measures to generate more revenue for the government of South Africa, where is that money going to be used for? What is it going to be used for? And is it going to be used optimally and efficiently? Or are we going to find ourselves just throwing money at anything and everything because we can, and then when it doesn't work out, we say, oh no, we need to raise more money? That doesn't solve the problem, right?
That's just it. It doesn't solve the problem.
Raising the money is not the problem.
Is that we spend too much, and truthfully, if we just cut out the excess, the corruption, the inefficiency, and all of that, we wouldn't have a problem at all.
Oh, you can't do that. We put that out to our TikTok community to say trim the fat. The conversation that we had last week around just some of the cuts, and it was a bit of mixed reaction to it, but there were certain people that came out and said, no, you can't cut people's jobs and salaries and things, or what about cutting the private sector and things? And let's be very, very clear on that, right? The private sector is held to account for their expenditure. When a budget is approved, when a CEO's salary is signed off by the board, if the CEO fails to deliver, we fire the CEO, we terminate their contract, and we move on. That doesn't happen in the public space. That doesn't happen where it needs to happen, and that's kind of why we got into the problem that we're in now.
And the fact is, you were talking about all the double homes. The problem is none of them are quick fixes, but everyone trekking down to Cape Town all the time for Parliament.
Yes.
All of the blue light brigades. All of the, as ministers, you get 2 cars and 20 bodyguards, and all of that sort of stuff. That's the fact. We're not looking at social grants. We're not looking at teacher salaries or
we haven't touched
nurses' salaries.
Absolutely, we're not touching the civil servants that are on the lower end of that scale, right? Also, to your point, Si, around the blue lights and all of those sorts of things, who pays for them to go back to Cape Town on Wednesday? Because we're paying for that. We're financing those sorts of engagements out of taxpayer funding. And we haven't even scraped the surface on the conversation that's been circling around as well, around, do we need deputy ministers? Because what do they do?
Well, we don't, and we don't need 28 ministers, but that's the largesse of the ANC, right? Which is, how do you keep this whole camp together? Well, hand out favors, whether that be DGs or boards of SEOs or CEOs of state-owned enterprises, and deputy ministers as part of it, and frankly, ministers as well. Because being an MP is, thankless, only 100K a month. Ministers, whatever, 250, deputy, so it's that type of, and again, they are small numbers. If we halved our cabinet and fired all the deputies, would that find us our 60 billion? No. But
it would get us close, though.
It would get us closer, and it would say to the South African taxpayer, hey, look, we're doing some stuff to try and fix this hole. Instead of saying, we've got a hole, we're not trying to fix the hole.
No. We're just going to put more sand over it and hope that eventually that goes away.
That is the problem.
That is the problem. That is fundamentally the problem. Ladies and gentlemen, community out there, please, we'd love to get your thoughts around what your expectations are of Wednesday. The budget speech will be tabled on Wednesday around 2 p.m. I will hopefully be giving you live coverage on radio around that. Si and I will likely discuss it on his show at some point in the week as well, depending on what outcomes come out of that speech. But we'd love to get your thoughts. We'd love to get your opinions and your comments around that. So I want to look at some of the other economic data points coming out this week. We know we're still in the middle of earnings from a bunch of different places, but we got non-farms last week. Market kind of did a bit of a not really moving much. But we've also got CPI out of the US this week. We've had CPI and PPI data out of China. And in our deep dive, we're going to be diving into the markets post-Trump. There have been a couple of executive orders. There have been a couple of tariffs that have been imposed. There have been retaliatory tariffs imposed. So we're going to look at the state of where markets are at the moment, looking at the global picture, not just one or two markets. But Si, economic data this week, are we even looking at that? Does that even make a difference at this point? Because the inflation conversation is so overdone.
The inflation still matters. It was 3. They expect it to drop down to 2.9. It does matter because we want interest rates down. We want the US to cut more rates so that everyone else can also cut as well. So it does matter. The problem with inflation is it's small moves, 0.1 and here and there. And truthfully, the Fed is looking at a whole lot more and trends and all of that. Absolutely. I also think it matters in the sense that whilst the jobs data on Friday was totally fine and a positive number, it was slightly low in expectation. The unemployment rate was expected unchanged. It ticked up 4.1. We saw a bit of wage inflation coming through. And in some ways, that is your canary in the mine, is the jobs data. Because and when Jerome Powell started raising rates all those many, many years ago now, he said we expect unemployment to suffer as a result. It hasn't. But if we start to see some cracks happening there, to be clear, Friday wasn't a crack, but it was a don't stop watching it. And I think inflation's the same. I mean, it gets boring. We see it all the time. We've got inflation expectations today. We had PCE data last week, which is what the Fed likes to look at. So yeah, we're also getting, there's that, and I can't find it and I can't remember who it is. There's some group who do sort of almost flash GDP, real-time GDP.
Okay.
And they were talking around a Q1 GDP that was in excess of sort of 3%, or in excess of 4% in some places. And they've now collapsed that down. They're now talking minus 2.8, and that starts.
That's a huge difference.
That is a huge
from
difference.
A positive number to a contraction,
and a giant size contraction number. Now, then they're partisan. They're not either side. They're just economists who
just put out data,
and that data changes sort of weekly, and it's that sort of data, so it can go the other way. But to be clear, the tariffs are creating uncertainty, and more than anything, perhaps what we see is that right now, if you're a business person and you've got some business or some connections with US, whether it's imports or exports or something, you are telling your team to look at alternatives. So you might not implement them, but you need to look.
But so now, how long? And I suppose this is something we could probably get into in the dive as well. Is how long it might take for these tariffs to start filtering through into the inflation line, because we know that you're going to effectively increase import inflation, or you're going to create a situation of imported inflation by imposing these tariffs, especially when countries like Canada and China are not afraid to retaliate and retaliate where it matters, right? So where do we then...
And so the imported inflation, it hits, and then you got the jump, and then you remember how inflation works, right? So it goes up this year, say 20% because of a tariff. Next year, the tariff is still there, so your base is higher, so inflation spikes and falls away quite quickly. But there are businesses. You are a widget maker in Wichita, Kansas, and suddenly your buyer of widgets is Canadian, and they're like, hell no, I can get the same widget from, I don't know, China or Europe or somewhere else, or maybe, so you start to revisit your supply chains.
Especially when you are kind of isolating certain supply chains. So especially when you're saying we will not have Chinese goods come in unless they have this imported tariff, and then you realize that certain sectors are going to be hit harder than other sectors, and the likes of China retaliate by saying, well, we're just going to come after your agriculture because that's your big line item. That's a huge move. But that we will get into in greater detail in the deep dive. Stick around for that. We're going to be looking at the state of the global markets, equity markets, and whatever else we can dip into. In the context of everything that's been happening, we now are starting to see where tariffs are headed, or potentially could be headed, and we're looking to see how they could continue to affect global markets. Then we're going to take a look in our investor insights at some of the picks that we've had from you in our community. You guys have asked us to take a look at some stocks, so we're going to be doing that for you. Stick around for that. For now, I think we're going to leave the market matters there, because we are out of time and we have to get into the other matters of the day. If you've missed the conversation, it will be up as a live stream. But stick around if you are still with us, and we'll be putting out the rest of the episodes later in the week. That's Market Matters.